Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Monday, June 17, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Another or continuing melt-up operation. SPY was up over $4 today, about 0.8%. The market continues to push higher into no man's land. And you'll see the next major area of resistance from a numerical standpoint is the semi-fat round number at 550. That doesn't mean that's where the market stops for good. That doesn't mean they have to get there tomorrow. It's the next logical numerical big fat round number that we have to hang our hat on. We don't have much else at new highs, so we pick out important numbers and we watch the market as they get there, as they react around those numbers, and you'll see whether or not they're important at the time. Now, we got a couple of things on the docket this week, so you might want to get out your sticky notes. First, we just had a contract roll for the futures contract. So the ES, the RTY, which is the Russell, and the NQ, which is the NASDAQ composite, or the NASDAQ 100, I should say, those rolled into the September or U contract. There was about a 60 or so point differential between the outgoing June contract. By the way, still is being traded. They're both being traded right now. There's volume in both contracts. Technically, it doesn't matter which one you trade. The numbers are different. One is about 60 or 65 points in front of the other one. That's all we need to know. But sometimes weird stuff happens around the contract roll. This was day one. Do they have a rug pull event tomorrow? That's possible. You can't bank on it. It's just information. This is regular way options expiration week. What does that mean? That means the third Friday of each and every month is what traditionally was options expiration, what I call now regular way options expiration. Options expire just about every day at this point. However, I think there still is some meaning to the regular way options expiration week, which is the entire week where traditionally, quote unquote, these are air quotes, weird stuff happens. Now, here's where you want to start really paying attention. What do we have later in the week? Well, we have the summer solstice. It's on Thursday the 20th, aka also known as a tinfoil hat event. Why is this important? Because a lot of the time, not every time, but it's a guideline. We want to use it for information. It's knowledge. Sometimes the markets will trade up or down into one of these events and have a turning point. Doesn't mean the market collapses if it's trading up. Doesn't mean we have a rally to new highs if we're trading down. It's just a turning point situation from an awareness perspective. So right now, the market's trading up. What if she trades up for the next couple of trading sessions? Are we going to have the awareness that she just traded up if she does that up into a tinfoil hat summer solstice event? And the answer is yes. By the way, of note, market is closed this Wednesday. Why is that? It's the Juneteenth federal holiday. Federal employees are closed. I'm assuming banks are closed. The market's closed. Most other people don't even know about it. So technically, we're 2 days away from the summer solstice, which is on Thursday the 20th. Of note, we want to know about that knowledge. Just so happens, when we get to Thursday, Friday, we're going to be in what's called an on-time type of situation. Now, on-time type of situations can happen on a 5-minute chart, a 10-minute chart, an hourly chart, a 2-hour chart, a weekly chart, a monthly chart, and a daily chart. This one comes from the daily chart. Of note, potential puzzle piece on the table. Anything wrong with the weekly chart? Last week's close, very good. Anything wrong yet with the weekly chart? Absolutely not. Trend is your friend. Above all the moving averages, the trend remains your friend. A little bit extended from home base. Home base is the 20-period moving average. and therefore our awareness is enhanced. Our antenna goes up. We're looking for what? Not a collapse. We're looking for, whether one happens or not, that's up to the market. We're looking for, at least from an initial standpoint, some kind of sign and or signal of a trend change. So here's what we have as we put this puzzle together for this week. All right, we had a contract roll, 60 points ahead of last month's contract on the futures. Market's trading up nicely. We have a big fat round number, semi-fat round number at 550. We're a little bit extended from home base on the weekly chart, so we know about that information. You go down to a daily chart and we say, all right, now we've got this tinfoil hat event in a couple of days. We also have the situation where the daily chart will be in an on-time type of situation while the weekly chart is extended away from home base. That's information we would like to know. So if all of a sudden we find the market, whether it's Thursday or Friday of this week, putting in some kind of sign and or signal of a trend change, maybe it's a big gap down lower, maybe it's an intraday reversal, maybe it's something else, but our antenna is up. We're watching closely for the market clues, the hints. See how we put this all together? Here's a 4-hour chart. Here's another example. In the live room this morning, I pointed this out to members and said, hey, look, from the half-day chart, the 4-hour chart, they're basically in an on-time type of situation. And what happened? They went up. They were eating time off the clock, got to an on-time type of situation, took off like a bat out of hell. Wasn't really a bat out of hell. It was more like a continued grinding melt-up situation until the end of the day. A little profit-taking comes into the tape. Where do you learn about these on-time type of situations? In the course, Lazy E-mini Trader. It's taught in detail, and the emphasis is on time. Time is more important than price. That's why you hear a lot of my focus is around time. Don't get me wrong. Price is important, but you don't always know where the important price is. Specifically, like right now, we're at new highs. What is the next important place up north? It's really just a guess. I'm not in the guessing business, so in this case, we only have time to revert to. And then we revert to the signs and or signals of trend changes. Where do you find those? There's a list of them in the course. Lazy E-mini Trader, just like where I teach time. See where this all comes together? What about inside the numbers today? We were on a melt-up type situation today. So when you take the whole day as a whole, if you will, whole day as a whole, that doesn't sound right, but when you take the entire day as a whole, it was basically a grinding, trend day, melt-up type situation. Okay, fair enough. But did we have important information this morning traders A could have used, B traders did use, and C gave you valid information during the trading day? The answer is yes. Let's go find out what that was. Let's start with a bull pivot. We had a bull pivot today. 542.35, that's our bull pivot and the gateway to the former highs and even higher. Let's start there. 542.35, fire up your sticky notes. Right of the vertical is today's activity. Here's a 5-minute chart. As you could see, our bull pivot was way down here this morning at 542.35. And if you just zoom in a little bit and focus on what happened early in the day, you can see resistance, 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 came down, finally came above it, got above it, retested it again, never looked back. At least for a good portion of the morning session, about an hour or so, that was certainly information worth knowing. The bull pivot. Let's see what else we have during the morning session. 9 o'clock, where are they now? Above, meaning above the bull pivot, and they go for higher prices. Fair enough. Below the bull pivot, and the door opens for a support zone found between 541.65 and a little bit lower, 540.90. Below the pivot, and the door opens for a support zone starting at 541.65. Back to the 5-minute chart. How you doing? 541.65 was today's support. Low of day is what? 541.61. Did we have traders picking off a low there? I would have loved to get a little bit lower, but we certainly were at the top end of the support zone. Did we have traders take a trade? Yes. Did we have traders make a profit? Yes. Did we have traders ride it all day? Yes. It doesn't cost you anything to hold the trailer. Our process is you book a base hit. Our base hits are 5 to 7 S&P handles, and then you hold the remaining portion. Could be 80% of the trade, 50% of the trade, 40% of the trade, 20% of the trade. Doesn't cost you anything to hold a trailer. This is the, we'll call it, process that my traders go through each and every day. It gives us the best of both worlds. We can pocket some profit. Base hits put us in the Hall of Fame, but you get paid when you hit doubles, triples, whoppers, whopper juniors, home runs, grand salamis, and the like. How you doing? Picked off the low again. And that was posted on the board 30 minutes before the market was opened for business. 932, 541.65 is the support zone, down to 540.90. You'll just see that over and over and over again. Pause the video. Here it is again, 541.65 to 541.90. There would have been a play it again Sam if there, meaning another opportunity. If they went back down after the bounce, it was still a support zone. Pause the video, read the notes, go back to the chart, and double check the work. We had nothing for stocks on the move today. The super scanner was shooting blanks. That's okay because we're in that donut hole, as I like to call it. That space between last earnings season ended and next earnings season doesn't begin until we get finished with June and into July. So the next couple of weeks, the earnings releases will be kind of light. We can have stocks on the move, but the volume of opportunities certainly will be less than during earnings season. Of note, just information that's good to know. What's going on over in Camp IWM? This morning, they had relative weakness. By this afternoon, they finished basically on par, even a touch, very small touch, but a touch of relative strength. So we're going to call this, for today's purposes, a reversal candle. Didn't have tremendous accompanying volume, but it's an outside day. The low and the high are outside of Friday's candle, which was rather narrow, made a new low today, reversed it back up. We have a divergence in the IWM. When you look at the daily chart of the spider, it's very simple. We're at new highs. The IWM has been melting down. We call this a divergence. One of those two things will resolve itself. Either the S&P and other markets will follow suit with my favorite leading indicator and turn around and go down, or the favorite leading indicator in terms of the small caps or the Russell or IWM will turn around and follow suit with the NASDAQ and the S&P and turn around and go back up. So whether or not that sticks, we don't know. We had a fake out last week. Well, we may have another one today. We may not. But this is the information that we know. We track it day by day. And the market is offering us clues and hints every single day. The question is, are we good enough to pick them up? Today's action in the IWM, the price action, cannot be bearish, doesn't have to be overly bullish. Remember, she's below 3 out of the 4 moving averages. You have a convergence of the 150 period moving average on the daily chart coming up, including a gap. Expect to see some garden variety chart resistance in and around that area. We'll call it right around 202, give or take. Camp IWM. What do we have working for team transports? The folks down at the transportation department. Friday, big tail candle. Today, somewhat of a retracement candle, finish near the highs. This is bullish picture, at least for team transports. Below all the moving averages, it's a weak tape, but it's bullish from one day to the next. They made a new low on Friday, finished halfway decent, put in a tail, a little bit of a retracement today, closed above Friday's high. All that information on its face is bullish in nature. Below all the moving averages, she's bearish. What does the weekly chart tell you? Weekly chart tells you she's being held, as you could see by the close of last week, by the 100 period moving average. What's these lines over here? This is a triangle. She can go to the bottom end, to the top end. That's not going to impact what happens outside of the bottom or top trend line of the triangle. Inside of here, she can go back and forth, but when she's out of time, she will be out of time when she gets to the apex of said triangle. Doesn't mean she has to trade in this triangle till the apex, which is not till like February of 25. It's just information, guideline information. At any point, trading below and staying below the low, or not the low, but the lower end, the lower trend line, vice versa up top, that will be a beginning of a breakdown situation or a breakout situation. Again, they do not have to get to the apex of the triangle. When you zoom in a little bit or zoom out, obviously there's a lot of room in here when you go back to the daily chart. A lot of points in here from line to line. So there's nothing you can do from a trading perspective other than be aware when they're at one line or the other. They may bounce off of it and you know where it's wrong. So there may be an opportunity for a long trade down here or a short trade up here until they show you they're breaking down or breaking out. That's a chart lesson using the current state of events in the transports. How you doing? What about the Qs? Anything going on here? No, it's just a continued melt up extended from home base, the 20 period moving average or the red sloping trend line. Same routine we always discuss. They will find a number, whether it's 490, 491, 495, whether it was today, we don't know, but same on-time situation that we discussed all the way back with the SPY or the S&P. But here they will give home base or the 20 period moving average a chance to creep up to price. They will have price creep down toward home base or a combination of both. That will happen. It's a matter of when does it start and from where. Later this week, we have a pretty good recipe for an on-time type of situation, plus all that other tinfoil hat stuff. What about the XLF? We have the makings of a head and shoulders formation. And today, what did she do? She came back to retest the neckline of the head and shoulders formation. What happens if she closes tomorrow back above the neckline? It's off the table. There is no head and shoulders formation. A lot of those fail. Traders need to know that. Most traders don't realize that. They see a head and shoulders. They're talking about it on TV. They're talking about it in the blogosphere, in the video sphere on YouTube and all that stuff. But what they don't know and what they're not told is the large majority of head and shoulders patterns found on charts don't play out. They actually fail. Some play out, but most don't. How do you like dem apples? Do the homework for yourself. Go find them and see how many played out. Of the 20 or 25 you find, if you do the homework, how many actually played out? Don't take my word for it. Do the homework. Be an investigative chartist. Smash mouth, melt up situation, getting way, way extended from home base. That will subside. Does it have to subside tomorrow? No, it doesn't. Same story. On-time situation, tinfoil hat. It's all the same market. They're all melting up right now. Where's it headed? Could it be 280, 275? 275 is a semi-fat round number. 250 is a bigger time semi-fat round number. 200 and 300 are bigger time numbers. See how that works? Write that stuff down. Put it on a sticky note. We talk about this kind of stuff all the time in the live trading room. Teach it in my course. All that stuff. This is important information. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're going to pull the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.